Welcome to the Best Half Show. This is a show where we believe that the second half of your life could be 10 times better than your first. We present contrarian insights that you won't find many other places, first principles thinking, and we are talking about one of our favorite topics and one that is very much on the minds of many people in our native Toronto, which is the real estate market. And we have some contrarian viewpoints, I think, for you today. In short, we think that this market is in really deep trouble.
Yeah, we do.
Yeah.
So this is maybe shocking for some of my friends and people that know me for a long time. I've been buying real estate since age 14. I've made most of my money from buying and selling real estate. I've done hundreds of transactions. But I started selling everything in 2021 and 2022 because it just didn't make sense to me, Mark.
Right.
Nothing was, from a cash flow perspective, every piece of real estate I looked at was now running a negative cash flow, made no sense. They're valuing real estate based on development potential, which again, didn't make sense. And then economically, and with COVID happening, I couldn't see the recovery going very well. So yeah, my contrarian view was I was starting to sell everything on the real estate side, and I put into Bitcoin, which I know we debate about. But I'm going to explain why today, why I think it's actually going to get much, much worse.
Right. No, I think that's great. I think three things I want to talk about today: why the market is primed for a really quite a deep crash, somewhere between 40 and even 70%, even 80%, in real terms, when you look at it in terms of inflation. So it's kind of a powder keg ready to blow. Why it may blow much sooner than many people expect, that there's so many catalysts, that are ready for that to happen. And then third, what do we expect to happen as a result, right? So those are kind of the three things. Unlike you, I've had less good luck in real estate. I when I first came back to Toronto from Chicago and looking at the real estate market, it actually looked pretty high, even in 1998 to 2000. Like even back then, things like price to rent were a little bit on the high side. There were a lot of good rental bargains. I wish I got on the property ladder back then. Anybody who's been to Toronto knows it's been one of the craziest bubbles, really, real estate bubbles in history.
It's the longest, biggest real estate bubble in history.
Yeah, it went absolutely from 1994 till 2024, and still, price to rent continues to go up, in the spite of interest rates being very high relative to where they were for the last decade. So you've done better in real estate than me. That said, I've been a student of the markets for a long time, and I think, like you, I believe that things are primed for something really deep. The average bear market, like a real bear market, prices go down more than 80% in real terms, and that happened in Toronto in real estate.
Yeah, in 1998, if you had bought in the peak in 1998, and a lot of people don't remember this, most realtors...
But the bottom, you bought at bottom in 1988.
Sorry, if you had bought in the top of the market and it took 13 years to recover.
Right. Okay. So I think 1994 was the bottom. So 87 and 94.
Right.
But prices went down. Right. I think in nominal terms in Toronto went down like 70%. But when you add inflation on top of it, so in real terms they went down more than 80%. A lot of people will be shocked. Like, really? You can buy something today for $1 million and it's only worth $200,000? Yes. You look at the NASDAQ crash in 2000, you'll see that. You look at property prices in Tokyo. In some cases, they've still not recovered. You can buy a house in Hokkaido for $1, okay, as long as you promise to take care of it. That's like 30 plus years, and it's still $1, right? So bear markets can be vicious. They can go down. Things can go down a long way more than people would ever guess.
So I think a more recent one was the U.S. financial meltdown in real estate. So there are markets now, so they've still not recovered all these years later. Think about that.
Yeah, some markets.
Some markets still not recovered.
The ones that were the most overvalued
right.
are the ones that take a long time to get back.
Right, and the average one took 10 years to come back. So when real estate crashes, it's a very slow process, unlike NASDAQ or yes. Yeah. Those are very quick. And they recover quickly. Real estate is very slow. And so we saw...
Well, and why is it slow? What's going on there?
So a lot of it's financed. So for example, in the US, if you had bought something, let's say a couple of years ago, and you had a 30-year mortgage at 3%, like you're fine. You're totally fine. But if you're in Canada, and most Canadians did variable mortgages, The longest variable you could go is 5 years for it to reset. So now we're at the 5-year point. They're screwed because literally all of a sudden their mortgage prices their mortgage rates are doubling.
Yeah.
To put this in perspective, 1 in 4 mortgages right now have a negative amortization, which means that people can't even pay the interest on their mortgage. So what's happening is every time they make a payment, they're getting deeper and deeper in debt.
Yeah,
We've never seen this before.
Yeah, that's one of the things that can make it go blow. But the reason why it takes longer in real estate is because it just takes longer for people to come to the realization they need to sell. So what you tend to see is this huge bid-ask spread, which you don't see in things like the stock market, right? The bid-ask spread is really small, but the bid-ask spread is large, and that's what we're seeing now. So what you see is sales volume fall off a cliff, but the price doesn't for a while.
Right.
It's just starting to crack.
It takes time.
So prices are set at the margins.
Yes.
So when my parents bought their house, and they bought it in 1994, right at the bottom of the market. They used to live in Hamilton. They bought a place in Toronto, and they bought from a divorcing couple who had to sell. They just didn't have a choice. Like literally, the judge says, you have to sell this house. It was a bad idea to sell. They just didn't have a choice.
Yeah.
So my parents came in with a lowball offer, and it made them really mad, but they had to sell because, again, prices are set at the margins. Anybody who could afford to hold on, held on, and it was very smart for them to hold on. So you get this standoff, this Mexican standoff that happens for a while, and then it starts to crack. And we're just seeing it now, right? We're just seeing it now where we're seeing some sales in Toronto that are off 25%, you know, even
some even more. Where you see it first as a real estate developer. So there's been not one single real estate project, not one single condo development in Toronto in 2 years that's made its pre-sale requirement. So what that means is they spend millions and millions of dollars promoting this condo launch. They spend like $100,000 at this party. They invite 80,000 realtors, and they have to hit a certain pre-sale requirement to get financing to build the condo. There's been over 200 launches in the last 2 years. Not one condo in Toronto has hit its pre-sale requirement, which means they can't build anymore. So usually the first time you see it is builders. Now you've got builders that sold 3-4 years ago, but the buyers are not able to close. So now builders are dropping their prices 40-50%, and builders are going bankrupt like this. So you see it first with the builders, and then next you're going to see with the individual homeowners that just can't afford their mortgage. And they're desperate now. That's what you're seeing now.
Starting to see it. So let's talk about the why, right? So how do you know if real estate is fairly valued, cheap, or expensive? Well, it turns out there's 3 numbers, right? So let's go and talk about. There's 3 key ratios that are used to determine if it's a good price. So probably the most important, I think, is the price to rent ratio. So if you look at the average price of a home in Toronto now, it's $1.05 million.
1.16 as of
Is it 1.16?
Yeah, 1.16 in May.
Whatever. Yeah. So 1.1-ish,
yeah.
right? And then the average rent is somewhere around $36,000 a year. So we're looking at a ratio of just over 30 to 1.
Right.
Now, is that a high ratio or is that a low ratio?
So it's ridiculous. So let me put this in perspective. So if you were to buy the average house in Toronto, same number, same math, it costs you over $7,000 a month to own that house. Over $7,000. If you were to rent it, you can rent it for around $3,200 a month. So just think of it logically. If you could rent the same house for $3,200 versus owning it for over $7,000, what makes more sense? So anytime you see a real estate market where it's cheaper to rent than own, you don't buy. You never buy in a market where it's more expensive to own than to buy. That's one indicator.
That it sure is. And it's a very important one. And so why would it be so high? Why are people willing to pay so much for housing? Why does the demand exceed the supply by so much?
We have the world's largest Ponzi scheme here in Toronto. And we have the world's largest MLS. We have 80,000 agents. There's no other city in the world that has more think about like stock promoters. Imagine 80,000 promoters driving up this demand, mainly through condos, because they get paid a tremendous amount of money in commissions when they pre-sell these condos. So put this in perspective for you. They're selling pre-sale condos at $1,500 a foot. So they're telling you, oh, Mark, buy this at $1,500 a foot. But the real resale price on that is $900 a foot. So they're telling you, buy it. It's a great deal at $1,500, Mark. But the reality is when they close on that property, they can't get $900 a foot for it.
Yeah.
Like this is
So they're selling a dream, right?
They're selling a dream.
So basically it's speculation. I think that's one big source of it.
Yeah.
again, Toronto real estate prices have been going bananas since 1994. Unlike in the US where there was a big downdraft, like
Right.
I bought a really nice place in Utah, it went down 60% at one point.
And that was normal. Florida, many properties that I saw and I owned down 50%. Phoenix, same thing. Like most of the really desirable real estate was down about 50% on
and
average.
we didn't have that here. Now a lot of those are back up, not
Correct.
maybe not all the way,
Correct.
but a lot of that froth was worked off.
Yes.
Here in Toronto, it didn't work off. We had a very quick 3-month downdraft
Yeah, a few
in
months,
2009.
yes. We weren't affected. Yeah.
Right back up again. So speculation's one. I've also read that this is actually a major source, a major money laundering center in the world.
Huge.
Both Toronto
It's
and
huge.
Vancouver.
TD Bank is paying a $2 billion fine for all the mortgage fraud they've done. $2 billion fine, TD Bank. That's just one of the banks. That's the first one that got in trouble. You're going to see them all.
Yeah.
This is the number one place to launder money. That's why most of the condos you see, you just go look at night and see how many don't even have lights on.
Most of them, a lot of are Chinese owned,
Right.
or Iranian or Russian or whatever.
Yeah.
I know even back in 2008, I was looking for a farm back then. And my realtor said, I've sold 3 farms in the last month to Chinese investors who literally came with cash.
Yes.
Like suitcases of cash.
Yes.
No mortgage required, none of it.
Yeah.
So what he's saying is it's actually Beijing money.
So let me give you an example. So there's a funds rate. So our past president and soon to be future president, Mr. Trump, was my biggest client for 5 years. So I was in charge of one of his projects here in Toronto, and we had an owners party. So you'd think Toronto project, Trump, some people from Toronto. Okay. The party was about 50% Nigerian military officials. Like literally 50% of the military officials from Nigeria.
That's hilarious.
Right? So you think about where's this money coming from? These aren't local buyers. We haven't had a first-time buyer in Toronto in a decade.
Yeah.
This is the money laundering center of the world.
Yeah. So the question is maybe that gets bigger. Does it continue? I don't know. But that's one of the reasons why it's so high. And 30-1 is really one of the highest in the world. There's some higher. Shanghai is higher, 36.
Yeah.
But it's very high. The long run average, this will blow people's
this is
minds,
incredible.
right? If you look at the last 100 years, the long run average for price to rent is 7.
Right.
So we're at 30-1.
Yes.
And so people are like, 7? Is that possible? Absolutely. And it's lower than 7 in some places in the world. Detroit is at 3. Okay.
Right.
I wouldn't want to live in Detroit.
Right.
But that's how low prices can get. And at one point, I expect, right? If things are overshot on a high side, at some point real estate will be fairly valued, and at some point it might even come back the other side.
It always does.
Again, there's some places you can buy a castle in Italy for $1.
Yeah.
You can buy a beautiful home in Hokkaido for $1. So at some point you might actually get it to overshoot, and it goes back to the side.
It's already seen. You're seeing it with office buildings. So there's
true.
office buildings in Manhattan that were valued at $600-700 million a few years ago, being sold for $135 million. The largest office tower in St. Louis, like a huge Class A building.
I saw that.
We just sold for $3 million. Its last transaction was like $180 million. Like, so you're seeing this already. It's happening.
That is interesting. And maybe you're right. Maybe it's a harbinger, right? You have the commercial real estate market might lead the residential market. So that's price to rent. Price to income is another one off the charts in Toronto, 12-1.
Yes.
So 12 years of average earnings in order to pay for a place.
Yeah, it's 12.2. It's the highest in the world. And when you compare that to like New York City, it's like 9. Right?
Yeah.
Or LA, it's like 7. So if for example, average price in Toronto is much more expensive than New York City. People go, Manhattan's expensive. Well, no, not compared to Toronto. It's actually cheaper. On a per foot basis, Mark, it's cheaper than Toronto. People can't imagine this. It's cheaper to buy a house in LA than in Toronto. And these are like global centers. I'm sorry, but Toronto's a great city. I love it. We've been here our whole lives. But this is not the center of the universe. This is not New York. Okay?
Yeah.
This is not LA, and it's never going to be.
Yeah, no, I think that's it, right? So people are really stretched to their limit, and you see that in the third ratio, which is the debt load that people have.
That chart's unbelievable.
And I think Toronto people, Canadians in general,
yes.
but Toronto and Vancouver, it's mental.
Yeah.
The most indebted people in the world.
Yeah. Yeah, we're talking about a 25% differential just between Canadians and Americans. When they talked about remember the debt crisis in Greece? If you look at Ontario and Canada, it's far worse. So the average household debt is off the charts, over 107%. Depending on which calculation. But people have stretched themselves beyond limits.
Right.
They've got their HELOC loans, they've got their second mortgages, they've got their, and they're cracking now. And that's why we have the highest amount of bankruptcies going on in
and
history.
credit card. I mean, credit card debt is crazy. I mean, people are maxing out, their Amex at 30% interest, and they've got tens of thousands of dollars in debt. So it's been, and I think that's how people have been. I think maybe they've assumed that interest rates are going to come back down again or something. So they've loaded up on credit card debt.
Yeah.
There's a lot of evidence saying that they've hit their limit. And maybe that's the next. So we talked about why this is a powder keg. It's ready to blow. Yeah. But this was a powder keg in 2014 too, and it didn't blow, right?
Yes.
So you need the why now. So why are things so, you mentioned like the negative amortization. That's an example of why things might blow. What are some other indications that we don't have to wait very long for this to happen?
Yeah, so a couple of things are, Toronto became a tech capital, became a tech haven. And if you look at, just for example, last 4 years of tech numbers, like the job hiring was crazy. And there's a lot of high paying tech jobs in Toronto, but they peaked during COVID and they're now down 80% from the peak. They're software developers that can't get jobs in Toronto. They're working at McDonald's. And then you've got, when you flood the market with millions of foreigners, which are pretty skilled. Some of them are pretty skilled, and they're willing to work for minimum wage.
Yeah.
So how do you compete when you're an $80,000 software guy and you're competing with the guy who's going to work for $20 an hour, and he's just as skilled as you are? So a lot of those high-paying jobs have now vanished.
Yeah, that's right. I mean, so I think that's one factor. I think there's a big boomer contingent.
Right.
In Toronto, they're all downsizing. My parents just downsized to a much smaller condo from a big house, right? So. And the younger generation can't afford to buy them.
Right.
Although, it's, again, the demand is there. The people who bought that house were Chinese investors.
Right.
Yeah.
Back to our money, our whole money laundering.
Yeah.
Concept.
So there is. So I mean, that's one of the countervailing forces.
Yes.
I would have expected this crash should have happened last year. We should have had a 40% crash last year.
Yes.
I think we've let in a ton of immigrants in here. I think we have a lot of investors that are buying, that are increasing demand.
Here's why it didn't happen last year. So we've never seen a government do this before, ever. This is unreal. Right. They literally said, "Oh, Mark, you can't pay your mortgage? No problem. We'll just readjust it. We'll do the amortization. How about we do 50 years? Oh, that's not going to work. Oh, how about 70? We're doing 90-year amortizations because the government doesn't want this to happen."
Right.
So literally, they've changed these insane amortizations so people's homes are worth less than the value of their mortgage, which is crazy. And eventually, they're going to realize, oh, I'm paying. So I'm barely even paying the interest on my mortgage. Every time I make a payment, I'm more and more in debt. And my house isn't even worth what my mortgage. Right. But people are so delusional that they're going for this. That's what's happening.
Yeah, eventually the light's going to come on.
Eventually light will come
on that one, and people are going to do what they should do, which is sell, which is our argument that we're making today.
Right.
That people should really consider selling. We'll see.
I want to go through a few more reasons why this is happening. So, Mark, we have almost 400,000 unemployed people in Toronto. So let's put this in perspective. That's the entire population of Buffalo, New York. Right. So we have record unemployment. If you talk to friends that are trying to find a job at any level, whether it's a bartender, server, software developer, it's super hard to find jobs. I'm hearing this from my kids and their student friends from university. They can't find jobs.
Right.
Like this, I don't know about you, but I've never heard of this where everyone I talk to, they cannot find jobs at every level. Nobody's hiring. This is a problem when you're talking about real estate.
Yeah, especially if you look at the bankruptcies that are, we haven't really seen a big bump in bankruptcies yet.
But it's starting.
The data is sort of
the data's
showing
incredible.
that it's pretty close.
Yes.
And the other thing is when you have a lot of unemployed people, you also have a rise in crime. And that's
which absolutely we're having.
We're seeing. I mean, it's crazy. I went to take the subway across town, and there were 2 stabbings at each end. So at Jane Station, I went to go in there, and I couldn't go because there was a stabbing, and I just saw it on TV.
Wow.
And then so I had to walk to the next stop. I took it for a few, and then said, "Oh, there's another emergency. We had to get off." And there was another stabbing at St. George. So this is the same trip. It's a half-hour trip, right? So, look, I still think we have much better crime rates here than a lot of other places. But
they're really bad.
Yeah.
But think of it, like when the average 1-bedroom apartment, we're talking about an empty, 200-300 square foot tiny little apartment. Because that's what they build in Toronto. We have the smallest footprint, like in North America. Like it's so tiny. But when you're paying $2,500 to live like in a studio, tiny studio, that's plus utilities, you need furniture, like people can't afford that. Like the average income, the average person making $50,000 a year in this city, but the rent is like almost 40,000.
Right.
Like this doesn't make any sense.
Yeah, right. So, and I think last thing, just to be clear, is that we have a lot of fixed rate mortgages that are resetting right now at
Right.
much higher rates.
Yes.
Interest rates, they came down in the last Bank of Canada decision,
Yeah,
but it came down a
0.2
quarter point or
quarter
whatever.
point, yeah.
So people who are sitting on variable rate mortgages have a little bit of a reprieve, but not
It's
much.
tiny, it's tiny.
It's not much.
Yeah.
So the variable rate holders
Yeah.
are in trouble.
Yeah.
But now the fixed rate holders are increasingly, there's more and more and more of them resetting. So that I think is what's actually the thing that blows the powder keg.
It is, because all of a sudden your mortgage goes up 60%. People are like, oh my God.
How are people going to do that? And they're
Right.
tapped out on credit cards.
They're tapped
whatever.
out.
So they're going to have to sell. So right now there's a big bid and ask spread.
Yes.
Just like how my parents got this crazy deal from a
Yes.
divorcing couple, which
Yeah.
also divorces are also at a record
Yeah.
high level. These people at the margins have to sell. They have no choice. And then
It's actually worse, Mark. So
Yeah.
we've been averaging about 18 to 19,000 condos per year we complete every year. This year, we're going to complete about 26 to 27,000. Next year, another record, another
Right.
28,000. So all of a sudden, we have demand is down by 71%. Like no one's buying. And now you're going to introduce another 50,000 brand new units. And when there's the less demand, we've never had less demand for a condo, and you got 50,000 more coming in the next 12 months. This we've never seen before.
Yeah. So we think prices are going to crash.
Yes.
You told me before 40%.
Yes.
I think that's a minimum. I think it could go down as much as 70%. The question is,
But we're already down. So just to be fair, we're already actually down 20%. If you look from the peak time.
Yeah.
So if you look at the peak, so you add
with
another 40.
with very few sales, but
very
but
few.
you're right. But eventually
Yeah.
it's going to be
Yeah.
more. The question is what is the Bank of Canada? What's the government going to do about it? Are they
Right.
just going to let this happen? I think not, but they're going to do something.
Yeah. So they've already done what they can do with these insane amortizations, where people are they're basically renting their house, but they're paying a far higher rent than if they were actually renting their house. So they literally have no equity in their house, but they're paying property tax, they're paying maintenance, but the mortgage is actually higher value. Like it just makes zero sense. Eventually somebody's going to go, does this make any sense? You're basically a renter. You've got no equity in this, but you're paying twice as if you just were a normal renter. So eventually people will realize that. But what's happening now is with condos, I do think that that's going to be really the bad. That's going to be like the asset class you don't own. But what is interesting is for detached houses, I actually think there's a positive story. I think in a couple of years they're going to bounce back fairly quickly because we're not building any detached houses. We literally have stopped building all detached houses.
But detached houses in Japan have gone down for a long time. So
Right.
what's going to happen that will make the prices go back up again? Because things are so overvalued. So generally when things are overvalued, they don't bounce back.
Yes.
But why is this different?
So all the people that we have as immigrants, they come from countries that have intergenerational families. Almost every country that people are coming from, they live with grandparents. And there's like 3 generations living in a house. They're not used to living in a tiny 200-300 square foot condo where you can't put grandmother and all these relatives. They're actually going to they're going to buy the houses. So in the next 5 years, you're going to see a huge demand again for Toronto houses because that's what the immigrants are looking for. Where I don't believe that demand is going to be there for the condos.
Yeah. I think the bigger picture, though, what I'm trying to get at is that you can't taper a Ponzi scheme.
Right.
And we're in a Ponzi, right?
Yeah.
So the way the Ponzi scheme works is that you need exponentially more money. All right. So now we're at the point, like you look at the debt, for example, in the United States, where now you're adding $1 trillion every
100 days.
Every 100 days.
Yeah.
That was 200 days not long ago. Eventually it'll be 50 days. Eventually it'll be 10 days. And eventually it'll be 10 minutes.
Yes.
Like it was in Nigeria. You mentioned Nigeria.
Yeah.
So what I've seen is since the Great Depression, which is the one time where there's an exception to this rule, and central banks learned from that experience, in every single time, without an exception, when you get into a debt crisis, which is what we're in, the central bank will always sacrifice the currency and save the system.
Right.
So as soon as you start having all these companies go bankrupt and all these people go bankrupt, because that's what's going to happen when prices go down 40, 50%, and then the government doesn't have their tax money anymore, what they're going to do is they're going to print as many trillions as they need to, and they will buy everyone's debt, okay? And they'll buy it all. They'll buy it all. Just like what they did in 2020. They bought it all, right? If they have to print 5 trillion, they'll do it. If they have to print 50 trillion, they'll do it.
Right.
And the reason why they do it is because that's where the elites make money. Okay, there's something called the Cantillon effect, and it was discovered by, I guess, a French-Irish economist. This was back in the 1700s. And what he noticed, right, was when the government prints money, not everybody prospers or suffers equally. There are some people who really prosper, and those are people who are close to the spigot, right? So people who are close to where the money is coming from. The money is coming here from a pipe in the sky. If I'm close to it, I get it first. If I'm far away, I get it last. And then I'm really screwed. So those people who are able to get that government money can then go and they can invest it. Okay, they can buy houses. They can build factories. Some of the wealthiest men that have ever lived did it in hyperinflations.
Right.
Because they were able to borrow,
yeah,
and then they were able to invest and buy coal mines and factories and all these sorts of things. But then for everyone else, they're stuck, paying $20 for a hamburger, which apparently is what they cost now, right?
Yes.
I mean, we both saw this great video that was made the rounds, where somebody took their Walmart order
from 2022,
and now looked at it today
and reordered it, and it was triple the amount.
Triple
and that's the real rate of inflation. That's what government doesn't tell us. We all know every time you go to a grocery store, you're just horrified.
Right.
The other day, sometimes they're paying $3.50 for a peach. Like this stuff doesn't make any sense.
Yeah.
So, and it's happening. But the good news about real estate, and this is why I think I've been successful in real estate, why I like it. Yeah. It's an interesting market. See, in the public markets, everyone has the same information, and everyone has perfect information in real time. Real estate is very different. You've got this weird, you've got these 80,000 realtors, and most of them aren't very professional. So
most of them will be out of a job.
most of them are not renewing their license this year because that cost them $5,000. A lot of them are. I think it's going to go down by half this year. But what happens? It's a market which is not very efficient. So you do find opportunities, and you're already seeing those deals. You're seeing some really desperate sales happening. So I do think, but I don't think we're anywhere near to be looking for deals. Like I think they're just starting to happen right now. It's going to be like another year or two of carnage before you find real deals. But I think this is important, Mark. A lot of younger people have come to me and say, "Hey, Roman, you bought us real estate over your time." I'm like, "But now, if I was doing it, I wouldn't be buying real estate right now." I mean, I think you could do better in a whole bunch of other things. Like I think equities are probably better. So just because your parents made money in real estate or your grandparents made real estate, you've got to have timing on your side, and timing is against you right now in this market. Now, there's other markets there's some values, but this one isn't. And the way you look at it is look at replacement cost. If it's going to cost you, if you can buy something anywhere near replacement cost, it's usually a pretty good idea. But when it's costing you 3 times replacement value, that makes no sense.
Yeah, no, for sure. And so I think what you're saying is that real estate in the long term may actually be a good deal in Toronto. And I'd agree with that. And I think, again, the reason why is the government and the central bank is just going to print their way out of this.
Right.
And housing is not a bad store of value. It's not great, though. I mean, and if you do look where they have rapid inflations, real estate's all over the map.
Yeah.
Like, so some cases it does okay.
Yeah.
But any time where the government can restrict rents, it's not good, right? When you have rent control, then landlords lose their shirt, and that's exactly what happened in Germany in the 20s.
Yes.
A lot of landlords did poorly. Farmland did incredibly well, right? So farmland produces food. It may be an asset class that does well. There's probably some strip malls that'll do well and some that won't. There's some cities, so I mentioned like Rochester, New York. For some reason, I've not been there in a long time, but for some reason, it is unbelievably affordable. It's just across the lake from here.
Right.
So if you really love real estate,
there's opportunities. Yeah.
Where you can buy inexpensively, you can get a lot of rent for it, and maybe it's not a bad idea for some people anyway to sell to sell their home or sell your second home.
Right.
Maybe you don't want to sell your primary residence, especially if your mortgage is close to being paid off.
Sure.
But if you're not, like if all you're doing is paying the interest on your primary residence,
makes no sense.
probably should consider selling.
Right.
maybe, maybe renting for a while,
Yeah.
or maybe buying somewhere else where
Yes.
it's a better value
Yeah.
and renting, and sort of turn turtle for a bit.
Yeah.
Because I do think in the next couple of years, prices will actually come back.
Yeah.
It'll come back because of artificial means.
Right.
But real estate is not a bad store of value, even in a time when a loaf of bread costs $20.
Yeah, and I think you have to buy low. You've got to find opportunities. Like when I find a property, Mark, sometimes it takes me 3 years just to get a deal. Like this isn't just like you talk to your realtor. They take you out on a Saturday. You look at 20 properties, you buy one. Like that's just retarded. Like it takes time to find deals in real estate, and that's how you make money.
Sure, each property is unique. Yeah.
So the one piece of advice I'd give people is this is a great time to learn about real estate. Watch what's happening, but you really want to understand that the fundamentals, for example, in SIG Toronto, are against you. So you really have to be super careful. And I would say the realtors are the last people I would get advice from in terms of buying.
Yeah, they're
real estate.
they're permabulls.
Right.
Yeah. No, I think you really want to talk to people who have a well-balanced view. So there's a tremendous real estate investor who is on YouTube named George Gammon, Gammon. And he made a lot of money in real estate. He's not a fan of real estate right now for a lot of the reasons that we're talking about, unless it's certain places, like he's bought in Medellin, Colombia, for example,
Right.
where he's bullish there.
Yeah.
He's a fan of gold. He's a fan of Bitcoin. He's a fan of commodities, and so where he has a lot of his money. So Rebel Capitalist is the name of his show. And so I advise listening to people like this because he has a really nuanced view of real estate.
Yeah.
It's not that all real estate's going to go down or
Right.
something going to go up.
It's not.
Some's
It's
going to
all
go
different.
down.
Yeah.
Some's
Yeah.
going to go up.
Yeah.
But what he would recommend right now is if you have too much real estate, which is most people,
Yes.
okay,
Yeah.
especially here in
Yeah.
Toronto,
Yeah.
they have too much real estate, is that you be well diversified.
Yes.
This is a great time to own commodities.
Yeah.
Commodities are things that people can't live without.
Right.
They can't live without food. They can't live without metals. They can't live without, gold's a store of value, the best
Yeah.
one. They can't live without these essentials of life. When you look at high inflation, those do really well because people need to buy it. You also don't have people investing as much in technologies to make more of it, which makes them even more expensive.
Yeah.
So that's what you recommend. So yeah, you should get advice on real estate, but don't talk to realtors because they have only one button, which is the buy button.
Yeah, and also I would also say, work with somebody that has been through several market cycles. And I learned this the hard way, Mark. It was when I went to the U.S. and I spent 5 years living there, and we did $1 billion in real estate sales that year. I thought I was a genius. I'm like, I'm going to buy, in all my projects. And
don't confuse genius with a bull market.
Right, exactly. So I've learned this the hard way, and that's why as soon as I saw this one coming, like I want to be out early. So I think you've got to be really careful. But if you're working with someone that's never been through a down cycle and they've never lived through it, they have no clue what's like. They're really
I
hard.
totally agree. And that's true for stocks too, right? Your average financial planner has also never seen a downturn, either. Right. So when I say I advise looking at the last 100 years.
Right.
And here's the thing: if you look at how to make generational wealth, there's really only one principle, and that is diversification, like real diversification. So most people here, when they think of diversification, I'm diversified. I got real estate and I got equities, and that's what I have, right?
Yeah.
Well, that's not diversified. If you look at a well-diversified portfolio, equities and real estate really shouldn't be more than 30% of your overall pie.
Right.
And for most people, it's like 80 to 90%, right? So you should have commodities, you should have gold, you should have fixed income. And for God's sake, you get 5% now, buy bonds, right? This is a good thing to own in your, again, I wouldn't put everything in that,
right?
But I think if you're well balanced, you will be able to ride out anything that's coming. And let's face it, there's a lot of risks in the world today.
And real estate is really hard work. Like I do it every day. So to get a 10% return, Mark, like we work extraordinarily hard. When I can get 6% for doing nothing in the bank right now, it's very tempting. So when the rates are this high, it's very tempting to do absolutely zero work and get 6% versus really work insanely hard, take all the risk to hope to get 10%.
Or at least be well diversified in real estate, right? So you can actually buy into farmland REITs, okay? Closed end or open end. So I own, and it's done very well, I own basically through essentially a stock, a whole bunch of farmland in Argentina.
Interesting.
I'm a big fan of Argentina.
Yeah.
I think Argentina is going to the moon. I think it's potentially the next,
especially with the new president.
well,
He's
yeah,
incredible.
I
The guy's
think
unbelievable.
It could be the next Colombia.
Yeah.
Hopefully he stays alive and has a
Yeah.
bulletproof vest on.
Yeah.
But Argentina has some of the best farmland in the world.
Yeah.
They have vineyards. They have incredible beef. They have amazing commodities, and they've had 100 years of shit. Okay,
Yeah.
which they're finally coming out of. And one thing, Doug Casey is a great speculator. I learned a lot from him. He says you'll never make more money in life than when things go from terrible to less bad.
Yeah.
And Argentina is going from terrible to less bad. So if you love real estate, great. You don't need to have some of the most expensive real estate in the world. Here in Toronto, you can buy ultra cheap, super productive farmland in Argentina, and it's dirt cheap.
You're right. I'll also
Okay.
make the same argument, Mark. When you live in Toronto, a lot of people think they're trees. They can't move. And it's a mistake. Right. And some of my smartest friends have moved. They moved to Florida. They moved to Costa Rica. They moved to Mexico. And they live like rock stars now at a fraction of the cost of living here. Yeah. And it's not scary to do. Like people think it's scary. It's not scary. So what $1 million buys you in Toronto is something you wouldn't want to live in. What $1 million buys you, even in places like Florida still, or in Texas, unbelievable. Yeah. And then when you take $1 million and you take that to Colombia or Mexico or Costa Rica, you live like an absolute rock star. Like it's next level. So we're seeing the immigration numbers already. People are leaving Toronto. They're going to these places, and even places like Alberta. Like you can literally have like double the cost of living at half the price in places like Alberta. So go to Edmonton right now. It's incredible. So you don't even have to leave Canada if you don't want to.
Yeah. Buy low and sell high. I mean, that's it.
it.
Yeah. Whether it's you're buying elsewhere, whether it's you're diversifying with other kinds of real estate, diversifying with other kinds of assets. But yeah, I think people here should really look at, selling their second home if they have one here, their primary residence if they, if they're not paying off much equity.
Right.
You could do very well by selling and holding off for a bit. And I do think that you'll have better bargains in a couple of years.
100% you will. All right. Well, that's our real estate wrap up. And thank you for joining us. Again, our website is thebesthalfshow.com. And we know that our advice is contrarian because you've heard a lot of the bullshit. Mark, can we just talk about the bullshit about Biden? Can we just let's finish on this? Talk about the government bullshit that we get. Can we just talk about that for a minute?
Well, I think, I think for you and I, like we've known this for 4 years and, the media and the White House have done a great job of dissembling and said, no, but Biden's a stutterer. Yeah. He's just a stutterer and that's all. Or he has a cold that day or whatever. But those of us who actually like believe our lying eyes just say, no, this man is demented.
Right.
And we could see at these rallies, like nobody's showing up to them, whatever. I think it just underscores, for anyone who's seen that debate, clearly even all the left-wing media, even all the left-wing politicians were horrified at the performance of Biden. You and I were not surprised. Maybe we're more surprised that they even trotted him out there for this.
What I was surprised is, and I just saw the video of it, they've now proven that he was just reciting what they were telling him to say.
Oh, right.
So that, unbelievable. Like you think in a live debate, they wouldn't pull that off, but even then, it was brutal. It was just brutal.
And it just underscores the fact that pretty much everything the government and media says is a lie, at least the mainstream media. Why you have to do your own research. You have to get independent sources. And you need critical thinking.
Right.
If you have a guy who can't walk off stage unless his wife is walking him off, he's got mental problems. Yeah. Okay? Yeah. It's not that his wife really wants to be there to walk him off stage.
Yeah.
And so and I think it really underscores what we're talking about today. Like the inflation numbers, the unemployment numbers, they're made up.
They're all made up.
Okay, if you were to look at the real inflation rate, it's maybe it's even more than what Shadow Stats says. It's at least 12%. There's a website called Shadow Stats that shows you what the real inflation rate is and the real unemployment rate, calculated like they used to calculate in 1980 before they put in all this bullshit.
Right.
And it's way higher than it is today. But even those numbers may be understated. Given the Walmart example,
we see it every day in the things we're buying, and it's going to get worse. Yeah. It's not going to get better.
So unfortunately, you can't, don't outsource your critical thinking unless you're outsourcing it to us, okay? Yes. And then we'll do some of that thinking for you.
Yes.
But even with us, like you should use our points as a point of departure.
Yes.
And do your own research. Go and really look into this and really think for yourself. Like don't just say, well, some expert said X, and therefore I believe X.
Yeah, I mean, doubt everything. What's great is we have like ChatGPT 4.0 now, and ask ChatGPT and debate, and then go to Gemini and go to the different, because the good news is the information's there, but you've got to ask the right questions. If
Yeah.
you're not asking the right questions, that's what people are getting opinions. They get opinions from their friends and their family, and they're making stupid mistakes. Like the real estate mistakes will wipe people out. Mark, people are going to lose their entire life fortunes. Just to give you an example, there's quite a few real estate developers right now. They're filing for bankruptcy. We're talking about thousands of people, thousands that are going to lose their life savings. That's their deposit they put in. Thousands of families are going to lose everything because they made a decision based on some realtor that took them to a party. I mean, that's what's happening right now.
Yeah,
you've got to do your own
And
research.
that's why I hope everybody really manages their debt load. That said, sad to have some debt when inflation's high is not bad because you're paying in cheaper dollars in the future. But for God's sake, don't be over indebted, because before we're going to get the big inflation, we're going to get bankruptcies first. And that always happens.
And it's happening. The stats are there, Mark. So I think that advice is really good. Live below your means, shed whatever debt you can. I mean, the interest rate on our credit cards is like 24, 25% now.
Definitely
take a look at what your rates are.
You should never keep a balance on a credit card.
Right.
For sure.
Take a look at what your interest rate is right now on your line of credit. You're going to be shocked. Take a look at what your business lines of credit card. They're horrific.
Yeah. So if you have access to a low interest line of credit, that's so valuable. So you want that. You're going to want to be able to tap that, because at some point, if inflation is 20% and you're borrowing even at 9%,
right.
Okay, that's a high rate for
Yeah.
That's a good deal.
Yeah.
Okay. If you can go and borrow money at 9% and invest it wisely.
If you could borrow at 9. That's
what I'm saying. If you can't, so I can. I have
Yeah.
access to lines of credit at 9%.
Yeah.
Or if you can borrow against your assets, can you borrow against your Bitcoin?
Right.
Can you borrow against other things like that, other assets you have? So if you have assets, you can borrow potentially at a low rate. And if you have a productive way to do that, so if you've got a business and you can invest in marketing, you can invest in people, you invest in product, or you can go in and buy farmland in Argentina cheap.
Right.
That's a good deal.
Yeah.
So
there's always opportunities, but our advice is really ask the right questions and be careful with making big real estate decisions right now, because they could be a real challenge for people.
For sure.
All right, thanks,
Wrap
Mark.
it up.
Appreciate it.